Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 8:19 a.m. on Eastern Time, Ethereum country $2,806, down about 0.70% so far. Respect over crypto market and the equity market. On a pre-market perspective, we are relatively down and flat at the moment. With respect to Dow Jones futures, down about 0.05%. S&P down about 0.22%, Nasdaq futures down about 0.37%, while oil is levitating around the $100 mark, just trading at the $181 per barrel, while the 10-year yield is surging all over again. It's currently approximating around 2.922%, touching the 3% mark again. Obviously, it's the anti-collision effect onto driving the financial market to go down, right? Which is a typical thing, right? Interest hikes go up, the overall market go down, regardless of any financial instruments, right? In respect to Ethereum right now, it's down about 0.66% as well, just following the market sentiment. And why is it red across the board, right? It's because of the FOMC meeting that's happening tomorrow. And obviously on top of a lot of the media affectation, based on historical pattern, every single time we, get the Jerome speech, right, the markets sell off from there because of surprise elements, right? And the last surprise element that we got was basically the interest hike from 25 basis points to 50 basis points, right? And it seems like the guidance that we get from the Feds has been progressively negative, right? It seems like they are slowly peeling off the bandage in a very, very gradual fashion, in a way that we don't appreciate, nor the market appreciate, because it doesn't give us a lot of sense of confidence, optimism, when they keep just kind of do it incrementally, kind of take things one day at a time in a very non-proactive perspective, right? Very reactionary, which obviously when you react to the overall market without some sort of like a proactive strategic initiative that gives people confidence on, let's just say it bluntly, knowing exactly where we're going, doesn't convey a lot of confidence, especially that's where your money is at, right? So right now we are at a bearish momentum across the market. So let's just dive into the technicals without wasting more time. Again, with respect to the FOMC meeting is tomorrow. So today we should technically see some sort of anticipatory pressure ahead of the Fed meeting. And I think we will see how we open. And I do believe that we might have some volatile 24 to 48 hours ahead. And I think what, contingent on Jerome's speech doesn't deviate from our expectation a lot, right? We should technically see some sort of a rebound across the board. But if we don't, let's say he says it's going to be a lot worse. Instead of raising per FOMC meeting, we're going to be raising a lot more severe. It's going to be 75 basis point instead of 50 basis point, which some Wall Street has, firms have kind of foreshadowed that a little bit as a sign of a hint. But if that's the case, that'll be terrible, because that's raising your interest by 300% in the cross of basically the last, I would say, 3-4 FOMC meeting, which is absolutely just poor management, if you may, right? So let's just dive into it. So with respect to recording time, again, 8:23 a.m. on the Eastern Time, we are levitating around the 2,800. So it's still because it's a flat number, but not because it's a real number. The real level we need to get back up to will be the 2,850, right? And at the moment right now, on the MACD front, we are below the signal line. Oh, and before I do that, let me just share with you. So our Patreon update has been updated with respect to holding about 200 stocks and crypto on both discounted cash flow, not discounted cash flow, dollar cost average risk management perspective, and also my buy, sell, hold signals. So it's been posted this morning, and around the first week of May, or the first week of every month would be the perfect time for you to subscribe to it. If you are interested to learn more about the mechanism, how it works, right? I'm happy to tell you guys more, and also share with you the link on how to perform this methodology, so you can make profit repeatedly by utilizing the buy sell signal that we perform on a day-to-day basis to triangulate your execution more properly, right? So going back to the program. So right now we are trying to go back to the 2850, right? And levitating in between levels. In terms of momentum right now, we're kind of flat, like just consolidating. We formed a W shape yesterday because of the slight rebound as the international markets opened up. It got some buying activity around the board, but obviously as the US market opened up, the main catalyst on the FOMC meeting convey the opposite side of the momentum, which subsequently allows to cool back down again. So right now the MACD line has been just dragging for such a long time, looking for more and more reasons on a day-to-day basis to cross back up. So I think right now anywhere from current level is already a steal, right? We are below the steal level for Ethereum, so incurring risk right now and hold it for a long term, 3 to 5 years out, is pretty much a no-brainer, because like investing is more of a long-term game rather than just like thinking about what happened in the last couple of weeks or couple of months even. So definitely think about in terms of your cash reserve, how you should be handling it. But if you don't have any cash reserve, just hold on and allow it to keep going from here. With respect to Bitcoin, flat as well, at the same level, right? We're trying to cross up so many times now. At the same time, we're flat at the 42 out of 70. So, do I see like coming down to 34? I would say that's a bit of a stretch, to be honest with you. But we'll see, right? If Jerome says something, really outrageous tomorrow, or the market reacts really negatively, we could be in for a roller coaster, right? But selling down to like below 30 or 34, that's a little bit of a stretch based on the technicals. Because ultimately you can go down, but you cannot go down in that level of cadence. It has to work methodically, right? That's why we, in the dollar cost average risk manager level, these are the frames that we always stay around, right? And that's why triangulating with these on a day-to-day basis for your reference is important to understand your sanity check, right? So you're not just deviating from by just looking at the chart and get confused from it, right? So with respect to Ethereum Classics, that about 2% so far at the $27 at the moment. I think anywhere from current level down to 25 is still always good level to DCA. We're relatively submerged at the 31 out of 70 right now. Respect to Dogecoin, yeah, I think anywhere from basically 12 cents below is logical to DCA. Cardano's down about 1.5%. Anywhere from current level all the way to down is fair game to DCA. Very oversold across the board. Solana is at down about 1.23% so far. Gave up everything so far. And right now, 85 to below is logical. We're 2 cents away from it. So it's not terrible, right? 85 to 75 is always good to DCA based on the current setup. XRP is up about 3% so far. 69 to 57, right? It's a logical level DCA. We are scooping up, still very submerged at 26 out of 70, right? Polkadot's flat as well. Anywhere from current level down is logical to DCA for Polkadot's. Algorand's, yeah, anywhere from current level down is still logical to DCA based on the current setup. We're relatively oversold, overreacted ahead of the meeting. Ooh, Shiba Inu is a good dip right now. You can see that clearly we're below the 2100. So we're basically at 2100 right now. So if we break 2100, we're going to go down to 1400, right? 900. And I think the propensity will be likely, knowing the fact that we're down on the MACD and the RSI is also leaping down as well. So yeah, 2100, 1400, 900. MACD down up 2% so far. We are at the bouncing from the 101, which is a flat number. But can we go back down more? Yeah, I think so, because of the momentum is relatively bearish on MACD. So be careful about this one. But as we get down further, I think the first level will go down to 101, obviously, and then somewhere around like the 90. So we're gonna be trading on like a flat number perspective. And the bottom technically is 62 cents, so you still have a while to go down, but that will be unlikely based on the current setup right now. And then AVAX at 57 right now. Anywhere from basically 59 to 50, so we're exactly there right now. So right now is a dip. And then lastly for Luna, 83 right now. So as we crack below 83 to 75 as the first level of resistance, if we break 75, right, 62, 52 to 45 from here, right? So respect to market overall, it's definitely the future is already indicating a relatively bearish day. And I think the biggest key driver is really just the investor sentiment and also with respect to the interest yields, the 10 years yield, how it's going to be triangulating for the rest of the day up until to the FOMC meeting. So I think we will see some pain ahead of us. But as we get over the pain, which is again overreaction, try to adjust for the price. As we get over that, we get some clarity, get some confirmation from Jerome himself, we should technically see some sort of a reversal, which I think we are in need for it based on the trends that we're seeing in front of us already. Okay. So let me know if you have questions, and I appreciate you, and have a good rest of the week as well. Tomorrow's a main event, so let's get ready for it mentally and technically, so we are not making irrational decisions from here. Okay, appreciate you. Take care. Bye.